Hello everyone. Today we're talking about the General Journal or Chapter 7. So up here we've got our links to the required knowledge, which is the use of the General Journal to record non-cash infrequent transactions. So over the last couple of weeks we've been looking at the special journals, so the cash journals and the purchase journal and the sales journal. And all of these journals are used to record really frequent transactions that are happening in the business. The General Journal is used to record these infrequent and non-cash transactions. So everything else that's happening in the business is non-cash and infrequent. We need to record in the General Journal. So they can't be recorded in the special journals. They do not involve cash, because otherwise they would be in the cash journal, because there's the infrequent journals or infrequent transactions in the cash journal are in sundries column, so they're not those. They don't involve the purchase or sale of stock on credit. So they're infrequent non-cash transactions, which cannot be recorded in the special journals, but recorded in the General Journal. So these are the types of things that we're going to be looking at for the General Journal. Commencing entries, non-cash transactions with the owner, bad debts, correcting entries, uses of stock for advertising, closing entries, and balance day adjustments. These ones here will be in later chapters. Okay, so we're going to look at the format of the General Journal. It looks a little bit different to what the special journals look like. We've got our date column, our details column, the debit and credit column, and then the debit and credit column of a subsidiary ledger. So we're going to go through an example with how all of these work in a minute. So again, all the transactions are recorded in date order, exactly like they would be recorded in our special journals. The details column is going to be used to record the name of each ledger affected by the transaction. So exactly the same as that special journal when we record. So the name of the ledger and in a date order. There are no classification columns in the General Journal, as there's no frequent transactions. So we don't need classification columns because nothing's going to be happening frequently enough for us to do this. So all the transactions that we're going to put into our General Journal are also going to affect the general ledger, just as they did with our special journals. So the debit and credit columns under subsidiary ledger are only used when subsidiary debtor or creditor is affected. So our subsidiary ledger is the one where we have each of our individual debtors or each of our individual creditors named. That's what this is for. So we know when to post to our subsidiary ledger. We'll talk about it later in the chapter. So when a transaction is recorded in special journals, there's no need to write a written description of what has occurred, because not only are they similar in nature, but also they're described in the title of the journal. So the sales journal is cash receipt and cash receipts journal. Sales journal is for all the things that we've sold. Cash receipts journal is all the receipts we've got in. So we don't bother to describe the transaction because we already know what it is. But in the General Journal, we don't necessarily know exactly what the transaction is, because this is a hodgepodge of lots of different types of transactions in here. So we need to record a narration for each of these transactions as we put them through. And a narration is just a really brief description highlighting what's going on in the transaction. It also has to note the source document involved, because you need to be able to link this back to the source documents to make sure all of our transactions are reliable. Okay, so I'm going to pause this video here and go through each of the different uses of the General Journal in each of the subsequent videos.